So what is the most efficient tax investment then, Sam? Is it
It
pensions
is
or something
pensions.
else?
It is pensions, definitely. So
Okay.
if you were, I get to talk about the sexiest investment that we've got in the UK. This is where you get the most thrill. This is where you get the most generosity. This is where the tax man gets turned off and we get turned on. So, like, this is what you need to be doing. And I think that people, I'm glad Tracy wants to help her niece engage with pensions early, because people don't. People think about everything else but their pension. And when somebody mentions pension, that's an income when I'm old, isn't it? Like, it's kind of like nobody really. And I'm just going to share a slide with you, because I don't want to have to talk through all of these numbers that are on it. So can you see that?
Yes, yeah.
So how important are pensions in the scheme of things? And the answer is they're more important than your bloody house. Who knows that?
Oh,
Who knows that actually over our lifetimes, if we do financial planning the way it's supposed to be done and we keep our money where it's supposed to be, this is how it works. In the UK, our pension pot would be worth 40% of our wealth and our house would be worth 38%. It splits it down here into different areas. And in some areas, it does say that property, that the pension is likely to be worth a bit less than your home, but it's still I think it's a pretty powerful message. When we think about, I'm just going to stop sharing that now for a minute. When we think about how much we would be willing to spend choosing a house, decorating it, even buying it, stamp duty and legal fees, and so we buy it and then we decorate it and then we redecorate it and then we buy it presents and we love it and we nurture it, and yes, it's valuable and fantastic and all the rest of it, but our pensions are actually more valuable to us during our lifetime than our houses, and yet they don't get nearly as much love and titivation. So I'm trying to big up pensions here. They've got 5 superpowers. So you get contribution relief when you pay in. So tax that you paid, or even if you haven't been a taxpayer, there's an amount that you can pay into a pension and get tax back on it. So that's great. It grows tax free. So just like an ISA does, any returns that you get, Simon was talking about interest rate returns, but any returns you get are all tax free, no capital gains tax. And then when you get to retirement, you can have a quarter of the fund back and pay no tax on having it back. So that's income, quarter of the funds comes back to you tax free. Then you've got the fact that actually, if anything happened to you and you didn't manage to live and spend the money yourself, it can be returned to your loved ones tax free as a lump sum. Especially if that happens during your early part of your life, before you're 75. And then you've got this business of your inheritance tax bill. One of the things that lots of people don't realise is that your pension is not part of your estate on death. So we were looking a moment ago about the fact that, a house might be worth half of the value of everything you own and your pension might be worth the other half. Well, you will pay 40% tax possibly on death on your estate, but not your pension. Your pension is not part of your estate on death. So it's got this extra superpower right at the end that I know you won't be around to benefit from it. But if you are thinking about a legacy and you want to make sure your loved ones get the most they can and the taxman is excluded from your will, then, that's an important factor. And I don't think pensions are billed strongly enough for some of these lesser known benefits. So even if find you're not able to put as much into pensions as some people are, because there are limits, because they're so generous, the taxman's got a couple of limits in place, so you can't just pay everything you earn into a pension forever. There are limits to what you can get tax relief on. But if you wanted to put more than that in and not have the tax relief on the contribution, you can and still get the tax-free growth, tax-free return on death. It's still not part of your estate on death. So there's still other reasons to do pensions. They're fantastic. And, I don't think that enough people give them enough attention early enough in their lives. They tend to come on our radars in our 50s. It's too late. Maybe you've been in a pension, not Tracy. Tracy's freelance, so she has to sort her own pension out. But if you're employed, somebody will have chucked you in a pension. But have you taken any notice of it? Have you looked at it? Have you seen what it's invested in? Because the place that we add the most value generally as clients join us is we look at the pension fund and we go, it's in the wrong asset allocation, and you are losing what might be £80,000 worth of opportunity over the lifetime of that pension. So have a look at what it's invested in, make sure it's appropriate for the time frame that you're going to be invested in that pension. So take advantage of them. They are the most sexy investment that is offered in the UK, and you can have lots of it. But there are some limits. It's probably a good thing, really, isn't there? Life without limits is dangerous. So yeah, pensions. I think they're fabulous.